Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I'm actually doing this show from the Buffalo Bill Farm and Ranch Expo that's taking place out in North Platte. And boy, what a day, a correction day as we do this report on a Wednesday. Tuesday was a gorgeous day when it came to cattle numbers. The question is, will we see it make itself better as the week goes on? A lot of different things that we're going to look at as well. Not only feedlot conditions and things happening, but we're going to look a little bit more at the inventory report. As you can see, Brad Kooima joins us. Brad is with Kooima Kooima Varilek out of Sioux Center, Iowa. And I want to put in the fact that, yes, we did not have a show last week. And yes, I know the inventory report was out. So to our viewers and listeners, I am so sorry. But last week also happened to be NCBA. And Brad was extremely busy with a variety of different things and meetings that were taking place. So we're going to kind of jump into first those inventory numbers, Brad, because you found some interesting, because you're a numbers nerd. And you kind of dove into that report and came up with some interesting statistics.
Well, interesting to me anyway. I don't know if it are to anyone else. Thanks for having me on, Susan. And to, full disclosure, it wasn't Susan's fault that Brad wasn't on last week. It was me being a lazy pile pretty much. But
No.
I had a bunch of meetings and anyway. The NCBA is less vacation, more like work. And I would have. It's nice to be able to really take those numbers and dig into them a little bit. And you mentioned that there in the, when we were previewing this a little bit. I'm sure most people have heard, right? It's the smallest calf crop since 1951, and that's correct, of course. The smallest calf crop are the cow herd since the 60s, which are, the numbers on the report. I'd say, people said, well, what'd you think of the report? And I said, it's good enough. And what I mean by that is I think that the report came in right on very close to the expectations, and those expectations were really friendly. Okay. So, we didn't disappoint anyone with the numbers. The part that I think is worth, if you haven't heard this already, I was anxious to let's extrapolate what we can expect, what the supply is coming out of this. I mean, everybody remembers the October cattle on feed report, I would think, right? Where you had that surprise uptick in the placements and the numbers on feed, then followed again by that November report, where it also showed that during the month of October, we also had bigger placements than expected. Well, if you believe the data at all, Susan, you go like, well, we got less cows than we've ever had before. I mean, we just can't keep placing more cattle randomly from out of nowhere. And so you can't. I mean, not if the statistics are correct, which I guess I think, what else can we do with but use the statistics that we're given? So you take a look at that inventory report now and go, I wanted to figure out, okay, what do we got available outside of feed yards yet to be placed? And it's a little over 1 million head of cattle, 1 million head less available to be placed. That's a number. You think about it in context, you kill 120, 125,000 a day. We're talking about 7, 8, 9 days of supply. So yeah, today we were down a little bit because I think we were having a correction, but the way those feeder cattle reacted to those numbers is spot on. In my opinion, this thing's going to get dicey. We're going to get wild. There's not enough to go around. You're going to have more feedlot capacity than there are cattle to fill it. So, yeah, it was a fun report. We'll see once quickly the market starts to worry about stuff like weather and what's the cash and the beef and the blah blah blah. But in context of what kind of overall supply we've got, it's a big deal. And it also told us, again, a question you've asked me 100 times about heifer retention. Hasn't started at all yet. So we'll see when that begins.
Well, you can definitely tell that, because when you see the sale barns and the amount of heifers that are still going through those barns to head to the feedlots, why wouldn't you pass up those prices? I mean, why? You know what I'm saying? You've got
Absolutely.
that option to make money. Why are you keeping them behind if you can make some money for your operation?
And that discussion over a drink or a beer while I was down there at NCBA, that's what we talk about. At least some of us do, and it's two reasons. It's economics. Number one is what I continue to hear from, just like you stated. Guys say, I can't afford to pass what they're going to give me. My banker told me I can't afford to not take what I'm getting for this heifer, so that's economics. But it's also the age of the average rancher. there's a number of them that are saying, yeah, you know what, I guess this is my IRA, this is my ticket out of here. I'm going to run a few yearlings. I'm going to get rid of these cows. I'm tired of the hard work that it takes to do that. So, yeah, very interesting. And to your point about the heifers, the number of heifers on feed as of the end of the year broke last year's record. So we still have a higher percentage as compared to steers than we've ever had. Broke the record that we had set last year. So still a tremendous amount of heifers on feed. I think that's still that was mostly what the uptick was on those increased placements back there last fall.
So before we dive into the rest of this market, I don't want to say it infuriates me, but it frustrates me when mainstream media suddenly lobs on to something that we in agriculture have known for quite some time. And it almost feels like it could cause some panic from a consumer perspective, because suddenly they're like, what? There's no beef? But there is. It's just, you got to look at it in a different perspective.
Susan, well said. And we don't tell our story well enough. It's funny you bring this up, because I went on a rant on one of the social media platforms about, so I get every Tuesday, I get this 13 major state beef breakdown of, like a jillion different cuts, right? I mean, several, like at least 60 or 70, like 8 different kinds of ground beef, for instance, and then 14 different kinds of loin cuts and stuff. It compares it to these major cities, the retail price this week, last week, and a year ago. Like on the major middle meat, the ribs, the strips, the ribeyes, we were actually, almost all of them are a little bit below a year ago. So Fox News comes out this morning and does a story about the cattle shortage, and I'm going like, are you kidding me? The old guys like me remember the sayings when we had a pit, where if the Wall Street Journal splashed this drought story across the front page, it would go like, oh, it's probably over. Now that they figured it out within the national media, now the rally's probably over. So yeah, I'm being somewhat tongue in cheek here, I hope, but to be lower today on a day, ironically, when they're finally figured out that, and I mean, cattle shortage, we killed 125,000 a day. I don't think it's really quite so short right now. It's what's out there in the future. But we've got to not, in my opinion, you start talking about, oh, this beef is high. A lot of consumers, some of them are very smart. A lot of them are not. If they hear it's high, they assume it is high, whether they've really priced it or not. It's the best product there is available, best product there is. And so, but if you train them to think it's too high, it becomes a mindset for some people. So it's great value. In my opinion, demand is tremendous still. So anyway, market feels pretty good to me.
So let's talk about feedlot conditions. It's been a struggle. I mean, as the snow melts, the lots get muddier, and that puts a stress on these cattle as they're trying to put on weight.
It's kind of funny. You talk to people that, are the big cattle traders or big cattle people, and then, like last week too, they go like, well, it's warming up. I suppose it's getting a lot better. And I go, actually, the mud is hardest on the cattle than anything else. And, well, really, and sitting where you are, it, Nebraska is probably at the epicenter of really the worst feedlot conditions there is, at least the different areas that I feed. We're starting to straighten out a little bit in Iowa. It's still really muddy, but Nebraska's had much more snow. And talking to people last week, you could include that all the way down into big parts of Kansas and even into parts of the Panhandle of Texas. So the cattle performance has been poor. You've had death loss. You've had inefficient stuff. So and I'm afraid from the forecast of things, rain. You got to be kidding me! Now we're going to get some rain. The feedlot conditions aren't going to improve here, not overnight.
Where are we at when it comes to waiting for cash to fully develop and the money flow for this cattle market?
Let's first briefly talk about cash. We had a great week last week on the cash. We finished up with the South at 179. Most asking prices I'm hearing are 180 or above. And you've got a producer that's somewhat reluctant to sell cattle because he doesn't like, how these cattle have been hurt. You're going to have a cattle buyer that's going to say, I don't want to buy all the dirt in the mud, because the cattle are carrying a lot of tack. So you're gonna have maybe a bit of a standoff this week. I expect it's going to be a late week trade. I do think that you got a packer that needs a few more cattle. I don't think that he's got an abundance of them, but I don't think he's got a big inventory. So I do think we've got a little bit of leverage and a little bit of confidence that the futures market should give you because of where the basis is. Fed cattle above 182. If you're a basis trader, you're going to want to try to sell cattle close to where the futures are, it seems to me. So in terms of the money flow, at the risk of sounding like a smart aleck, we talked about how the funds had gotten out, right? We talked about that. We talked about how that means the funds have some bullets now, right? And that's what's happened here last week and the last few days here with this rally. These funds have come after this cattle market because we've turned the market technically now into an uptrend. And they've got a lot of pent up buying energy here that they're seeing. A little down day today, an inside day, technically day, and not that anything, no reversals, nothing like that. And we can maybe have a couple 3-day correction here. I think that'd be good for the market. But this thing is in such a better spot than it was here 4 or 5 weeks ago. It's much, much, much more fun to talk about.
All right. One final note. Consumers just need to get out there and continue to buy beef. Go to their meat counter, their butcher, wherever it is. And let's get those grills going.
Ribeye for Super Bowl, and then let's warm it up, and then we'll all start cooking, right?
And Valentine's Day. Hello.
That's the then and Mother's Day. That's the number one New York strip day. Yep. Well, you got it. I'm with you.
All right, sounds good. Best way for folks to get a hold of you, Brad?
712-722-0023 or akvtrading.com.
And as a quick reminder, commodity futures and options do involve a substantial risk of loss not suitable to all investors. That's been this week's Cattle Call on the Rural Radio Network.